You can see we are getting an Adam and Eve double bottom here. We have the first bottom here and then the second bottom over here, and it looks like Ethereum actually did break out. Welcome back to Crypto Fitness. I'm Jay. If you like making gains, subscribe, share, like, and comment down below what your favorite crypto project is and your favorite way to work out to take care of your body. Now, jumping over to Ethereum, we have a very similar projections and very similar price targets for Ethereum as we do for Bitcoin, although Ethereum is a little bit more bullish because we haven't broken a lot of the EMA ribbons like we have with Bitcoin. If we come here to the daily time frame, we're getting some strong signals. We have a green dot here on market cipher B. The money flow is just now getting into the red, which is a little concerning because it's been in the green for such a long time. It's just now getting into the red. I mean, there's definitely more room to the downside, but the RSIs are oversold. They are below the 25 line. Those are classic buy signals. We are getting some strong numbers here on the DBSI. We've got a 19 over a -5 on the previous candle and a 20 over a -5 on this current candle, which is great news. And remember, if you are new to crypto or if you are trying to take your trading skills to the next level, be sure to get on the waitlist for my course, Crypto Trading Secrets. I will teach you from A to Z how to trade with leverage or without leverage, whatever strategy you want. I teach you how to create your own strategy so that you can, however much time you have or however much money you have, you can make a trading game plan based on your specific situation. I teach you exactly how to do that, as well as some of the most advanced secrets that the top traders are using in the crypto space today to gain an advantage and to maximize your gains and minimize your losses. And you know, we are all about those gains on this channel. And you can see that we are bearish. We are in a bearish trend on market cipher A. We did flip to the gray ribbon, so that is bearish. The 20 daily EMA ribbon for Ethereum did cross the 100-day as well as the 50-day or earlier, and it is now looks like it's flattening out. It doesn't really look very close to the 200-day. Looks like we did hold the 200 daily EMA ribbon for Ethereum, which was approximately at 1977, and I actually made I dollar cost average into this bottom here. I bought more Ethereum down here at 1890. Is what I bought in at. So that was a relatively good dollar cost average move. And in my opinion, because we're getting a bullish divergence on Bitcoin, we should get some upside here for Ethereum. And these are pretty strong numbers for the DBSI, which is good. And we can see the 20 daily EMA ribbon. It looks like it's flattening out and looks like it wants to come back up for a golden cross for Ethereum. But you can see like the 50-day hasn't even crossed or even touched the 100-day EMA ribbon yet. Whereas Bitcoin, you know, we have had the 50-day not only crossed the 100, but it's crossed the 200 daily EMA ribbon. So Bitcoin is more bearish, in my opinion, than Ethereum right now, but obviously we know Bitcoin is the leading indicator, which is why we look at that mainly. Now, we do have a double bottom pattern here. If we scroll down, if we kind of zoom into the some of the lower time frames, you can see we are getting an Adam and Eve double bottom here. We have the first bottom here and then the second bottom over here. And we can see that some of these EMA ribbons look like they want to cross. The 24-hour EMA ribbon looks like it's about to cross to the 54-hour EMA ribbon, and which is going to be good. It looks like we did break out. The neckline was right here at approximately $2,000 for this double bottom pattern. And it looks like Ethereum actually did break out. I mean, from this neckline, I mean, made a higher high from these previous highs. So that's good news. Looks like we could be getting a little bit of a throwback maybe. We did break out. Typically what you'll see is a little throwback before continuation to the upside. So if that plays out, just keep that in mind. That is okay. And the target for this double bottom pattern for Ethereum is all the way up here at approximately $2,300. And you can see the 200 4-hour EMA ribbon it's confluent with that price target. 23.25 is where the 200 4-hour EMA ribbon is. And this is the 4-hour time frame, so keep that in mind, not the daily. If we come back to the daily, we can see that this price target would actually be confluent with the 100 daily EMA ribbon right here at 2,350. So very, very good target. Obviously, it may not come up all the way to that level because we are in a bear trend and we are still in a mini bear market technically. So because of that, typically these breakouts, when things are bearish, it's harder for Bitcoin, Ethereum, and these price actions to hit these targets. In a bull market, when it's bullish, in a bull trend, it's more likely to hit the target than not. In a bear trend, it's more likely to hit downside targets. So if you see something like a breakdown of an inverse head and shoulders, or a breakdown of some other pattern, and you track that, let's say you tracked it to the downside, right, instead of the upside, it's more likely to hit the downside target than it is to break and hit the upside target. Now, that doesn't mean it can't hit the upside target. Obviously, we are in a bull market with a mini bear market in between. So if this indeed is the reversal that we're looking for, then obviously this could come up and, hit the target and maybe even exceed it, and we just go to the moon from start the second leg of our journey, the second bull run of this bull market, this bull cycle, which would be awesome. I think it's going to take a little bit longer. That's just my opinion, because of lengthening cycles and diminishing returns. I talk a lot about that in my previous videos. And also because, in my opinion, this accumulation period for the Wyckoff method, it hasn't really reflected the same amount of time as the distribution period. So in my opinion, I think it's going to take at least as long as the distribution period. The distribution period took, I think, 3, maybe 3.5, 4 months for the distribution period. And right now we've only been like maybe a month and a half in accumulation. We may come up here, hit this target, but we may come back down, maybe consolidate up here a little bit and then fall back down like this, maybe consolidate and just zig and zag in this zone for a little while. Obviously, we want things to be bullish. We want this to break out, but we have to be pragmatical. We have to look at the data, and we have to look at evidence and history to go off of to make educated and confident decisions based on data and not based off emotions. Because we know if we make trades based on emotion, that's how you lose. We got to make trades based on logic and reason. And that is how you become a successful trader, based off the data. And if you're about those gains as well, be sure to like, subscribe, comment down below. And because my course is free and my content is all free, if you'd like to support my channel and support my work, you can donate any amount of money or crypto that you feel is equal to the value of the information in this video or any of my other videos. Links to my Cardano, Ethereum, and Bitcoin addresses are in the description below. So if you like gains, be sure to subscribe, follow, and share. Comment down below. And the very last thing, stay fucking hard.